Missiles are flying, America is striking, tensions are rising across the Middle East and Western Europe. Oil is reacting, gold is spiking, currencies are shaking. And while the world is watching the headlines, smart money is watching the chart. Every time there is social political factor or crisis happening in the world, liquidity chiefs. When bomb drops, safe haven asset rally. And when there's uncertainty in the world, volatility expand, and volatility is opportunity. Basically, what I'm trying to say is whenever there is a social political factor in the world, the dollar will respond, gold will respond, oil and crypto will respond. The big question is, are you ready? Crisis means cash flows for traders. And today's episode, I'll be talking about how we can combine fundamental and technical analysis into taking profitable forex trading. Sorry, I didn't introduce myself. For those of you who are joining us for the first time, my name is Bestman Dipri Kelsey Makri, and you're welcome to Traders Advocate, a channel built for struggling traders. If you're a struggling trader, this is home for you. This is where forex is simplified. No indicators, no moving averages, no replay mode, no hypothetical stuff. This is where we come and we preach the gospel. Alright, smash the subscribe button, the bell notification. Let me guide you, let me lead you like a proud father leading his son into prosperity. I'll catch you guys after the intro. Alright traders, welcome back to my screen of prosperity. Let's break this page down. Before we start, I want to say something. I want to clarify something so I don't get dragged or my speech is not being misinterpreted by most of us. I'm not happy that there is crisis in the world. I'm not happy that people's livelihood are being blown, people's houses are being destroyed, and people have loved ones are being killed. Don't get me wrong. Things like that doesn't really excite any person, any responsible person. But what can we do? I'm a trader, and my job is to identify opportunity and make money. Best alone for me, everybody should just chill and relax, and everybody should just have fun and respect each other's boundary. But again, what can we do? We are traders. All right, let's jump into today's analysis. Let's see how we can use the crisis as to fuel. Let's see how we can use the crisis to fuel trade opportunity, and how we can jump on that and make money and put money in our freaking pocket. If you have not subscribed, hit the subscribe button. Please do smash the subscribe button, the bell notification, so you don't miss out on our subsequent video. Watch to the end of the video, or tell me how you feel about our videos. Drop a comment. I go through the comment section. All right, let's start it. Euro USD from the better part of 2025 up to 2026, we've been inside of this range. We've been consolidating within this high. Let me go to the weekly. Okay, we've been consolidating within this high and this low. Okay, we've been trading between this high and this low, and for most persons, these are blown account. These are headache for most traders. This is several abandoned strategies. This is several failed firm challenges. Why traders are used to trading directional basis. Market going up, they're buying. The market coming down, they're selling. Once the market going to a range, the average trader tend to struggle. So what am I looking at here? Why the market was in a range, systematically the market was building a case as to why it wants to continue, keep rallying to the upside. If you look at this properly, you will notice we form what they call an inverse head and shoulder. This is the left shoulder, this is the right, this is the head, this is the right shoulder. I think that again, this is the left shoulder, this is the head, this is the right shoulder. This area marked with the gray bar is the neckline of the inverse head and shoulder. Inverse head and shoulder are bullish continuation sharp pattern. Okay, they can reverse a pullback to continue with a trend, not a must. Sharp patterns, regardless of the time frame they occur, they can be invalidated, i.e. the monthly, weekly, regardless of time frame they form, they can be invalidated. But I'll tell you something for a fact: the higher the time frame, the higher the probability of that sharp pattern playing out. Okay, on this area, like I said earlier, marked with the gray bar is the neckline. So once we broke out of the neckline, we don't buy at the breakout of the neckline or shoulder line. Any sharp pattern that occurs, we don't buy at the breakout of the neckline or shoulder line. So once we broke out of the neckline, wait for price to pull back into the neckline or shoulder line, whichever you call it, wait for a bounce. So once I saw the breakout, a bounce here, or the daily paints a better picture. Or if you didn't watch the last episode of Forex Weekly Insight, please go and watch the last episode of Forex Weekly Insight. We saw this and we called it out here, and at the time I said I wasn't really confident with this breakout, a retest of here. I said I wasn't really confident. I think I talked about it in the last episode. Go and watch it so you have clarity, and you can also attest to our transparency, right? So I wasn't really confident with this breakout. Now this is textbook knowledge. A breakout, a retest as a call. We have a bullish engulfing candle. Most traders would have jumped in for a buy here. Think this is a breakout, a retest here, and the stop loss comes at below this area, and anticipation power just keep pushing to the upside. What happened? We did push up to the upside a little bit, but came back and smashed their stop loss. The stop loss got smashed. At the end of the day, they have their hands on their head. Now, were they wrong? They were not really wrong. Our textbook knowledge, baby pips told us breakout, retest, and we have a breakout, a retest, a confirmation to the upside should have occurred. But so now this is where experience beats textbook knowledge. I've been doing this for over 10 years, right? Over 10 years, right? And once I saw how we broke out, which was good, the pullback, I wasn't really comfortable with the pullback. It was too linear. The market barely works like this. The market barely works like this. The market barely works like this. I'm going to zoom in properly so you can see this. Okay, so let me get it. So the market barely works like this. Okay, this one is even better. Let me adjust this properly. Cool. The market barely works like this. The market barely works like this. Okay, so this is what happened here. When we broke out here, we came in here. I wasn't really confident with this. I called it out on the last episode. And what happened? Those who are not experienced in trading probably would have jumped in there. At the end of the day, their account felt the heat. So I wasn't really comfortable with this, and what happened, we just came back below. Like I said, this is where experience beats textbook knowledge. So what's next for the Eagles? The Eagles is, for what I can see, is with the inverse head and shoulder pattern has been invalidated. Why do I say so? This was a breakout. Once we break out of a neckline and we pull back below it, it just tells you there is not enough buying pressure to push the euro to the upside. Now, talking from a fundamental standpoint, across all board, the dollar has really been weak. But due to the recent happening in the world, and the dollar is still considered a safe haven currency for most countries. I feel we experience a decline of the euro to the downside, while the dollar is a safe haven currency. Although most countries have started to de-dollarize, start to move out into other safe haven currency like gold, as most countries are starting to move into other assets like gold for base, which also is safe haven currency, while due to America weaponizing their dollar. But I still feel the dollar is still a safe haven currency. I won't be surprised if we experience a further decline to the downside due to the current happening around the Middle East. So this is looking like a faker. So one price, try to, so the weekly will paint a better picture. So this is looking like a fake out. This is looking like a fake out. Now you see how this is a doji, and this candle here, they are not looking healthy. We break below here and we are currently staying below here. If I see a bearish engulfing candle close, take it again, if we have a break of this, okay, the 4 hours will paint a better picture. So if we have a bearish candle break of this trail line, we are coming down. It's as simple as that. If you see a proper break of this trail line, we are coming down. If you're a day trader, you can sell all the way into this area. You can sell all the way into this area if price breakouts from. So this is looking like. So let me explain what's going on. This is a fake out. We've broken below this shoulder line of that inverse head and shoulder. We've come underneath it. We are currently retesting it, and if I zoom in properly, you will see we form a double top on this area. Double top, if not a triple top. these are bearish reversal sharp pattern. They have the potentiality of reversing a pullback to continue with a trend. So what I'm seeing here is this double top wants to reverse this immediate trend to continue with this trend here to the downside. So if you see a breakout of this trend line, we don't say support or resistance, please. If you have a 4 hours candle break of here, the next target will be here. All right, the next target will be here. But if we break above this area and we start pointing, we have a daily bullish engulfing candle break out of here, I see no reason as to why we shouldn't come here. Then I'll be more confident and in going long here. But if we break out from this trend line, I'll be shorting the euro. But if we have a bullish engulfing candle bounce from here, I'll be thinking of going long from the euro. So let's look at the reason as to why we might actually experience a hiccup to our analysis. All right, so let's do a proper top-down analysis. Let's look at the market from a bed high view if we might have any issues. Looking at this market from a big picture perspective, the trend is bearish. And this is an immediate trend. I've been saying this for a while now. This is an immediate bullish trend that has run into major area of a major trend which is bearish. This trend here is an immediate trend. There's not a major trend. The major trend is bearish, okay? And if I draw my trend line properly, we've come in for the third touch of this trend line, okay? We've come in for the third touch of this trend line. So what tends to happen is, how do we know when an immediate trend or pullback wants to reverse to continue with a major trend? It will always run into key areas of that major trend, all right, i.e. support or resistance or trend line. And once we come in, especially once we come in for the third touch of the trend line, which is this is the third touch of this trend line, expect the immediate trend to reverse to continue with the major trend which is bearish, okay? So I'm going to clean up this properly. I'm going to clean up this. I pride myself a cleaner chart. Let's see what is happening. So if we tried a couple of times to break out from this area marked with gray bar, we failed. We tried again, we failed. We tried again, we failed. And this trend line was also here. So if we have a bearish engulfing candle close below here and we take out this area, if we take out this area, best believe this immediate trend has been violated. We'll just keep coming down to the downside. I take that again. If we break out from this area marked with purple bar, we are coming down here, okay? So the deciding factor would be the breakout of this area. If we break out here, we are coming down, and this area will be areas where you want to lock in a significant amount of your profit. That is if we start pointing down and we take out this area, we will just rally all the way to the downside, okay? It just means that the dollar will start doing well and the euro will plumb to the downside, okay? If we take out this area, we are coming here, all right? So that's it. But if again we can't, we kind of stay above this area, maybe we stay above this area and we have a bullish engulfing candle close above this area, best believe will push to the upside. That's simple. If I see a bullish engulfing candle bounce off from this area, close above this area, we are currently coming back here. So let's look at the dollar index. So the deciding factor will be, if we see a bullish engulfing candle bounce here, we are coming here. If we see a daily or a weekly bullish engulfing candle bounce above this area, we are coming here. But if this trend line I marked out here, if we see price comes here and take out this trend line, if you see price 4 hours break of this trend line, we will continue all the way to the downside. It means what I said earlier on will just play out. It means you will just experience a further decline to the downside. Don't forget to close in significant amount of your profit once price comes into this level. Once price comes into this level, you want to close in significant amount of your profit. This area has the potentiality of reversing price to the upside back, okay? So once price comes in here, you want to close in significant amount of your profit. All right, so the deciding factor will be the breakout of this area or a bullish candle breakout of this area would have a push to the upside. All right, so if that happens, we just align ourselves with one of which, as traders, we react to what the market is giving us. We don't force the hands of the market. If the market tells us, look, I want to go down, we align ourselves. We're looking for selling position. If the market tells us, look, I want to blow to the upside, we align ourselves with looking for buying position, buy fuel. Due to the current happenings in the world and due to what I'm seeing from this technical analysis, we experience a decline to the downside. All right, once we come into this area marked out, start locking in significant amount of profit. Why? Because price can come in there and reverse. Okay, let's look at the dollar index. Let's see what would be of the dollar index. The dollar index, again, the dollar index is the euro USD chart turned upside down. Both pairs are inversely correlated. So if the dollar index is selling, best believe the euro USD will be buying, and if the dollar index is buying, best believe the euro USD will be selling. Not just the euro USD, dollar index is the average price of all other major currency pair put together. If dollar index is in a range, other major currency pair will be moving very sluggish or likely going to be in a range. The dollar index like fuels other major currency pairs. All right, so enough of all of that. Let's see what is happening. The dollar index will be trading between this high and this low for the better part of 2025 up till now. The first week of March, we've been trading within this high and this low, and God being so merciful and so loving, we've been able to eat not once but twice inside of this range. We saw the reversal here to the downside. We saw this immediate pullback coming here, reversing to the downside. We made money here. We also made money from also this pullback down here. So what's next for the dollar index? What I can see, we form what they call a triple bottom. A triple bottom. Triple bottom are bullish reversal sharp, and they have the potentiality of reversing a pullback to continue with a trend, a bullish trend. So this is a first bottom, second bottom, third bottom. And also know that inside of a range, the market tends to bounce from one high to one low. So see how we bounced from here, we came here, we bounced from here, we pushed up again, we came here, we bounced, we pushed up again, we came in here, we bounced. I mean, the pattern should be telling you a message that we've come in here again. You should expect another push to the upside. Not only do we have a triple bottom, we've also formed what they call a tweezer bottom. Right, tweezer bottom is a bullish candlestick formation, right? And this is a tweezer bottom right here, and I won't be, so we have confluence here. We have triple bottom, we have tweezer bottom telling us, look, expect a push to the upside. Okay, the daily will paint a better picture. All right, but this area marked with gray bar as being that bad boy, that wayward boy, that has refused us from actually experiencing that push to the upside. If you look at this properly, the daily time frame, look at this daily time frame properly, inside of the range we are forming a bearish trend. This is a high, a low, a lower high, a lower low. It looks like we've come in for do a retest of this low. A continuation to the downside should occur. So the market is giving us conflicting information. The monthly and weekly are telling us, look, we have a triple top, triple bottom, expect a push to the upside. The monthly is telling us, look, we've come into this resistance area, we have a double top, because this is looking like a double top. First top, second top, expect a decline to the downside. Now this is very normal when you are trading market conditions that are in a range. Inside of a range, because we have equal buyers and sellers, the market can give you reason as to why it wants to buy, at the same time give you reason as to why it wants to sell. Okay, so both time frames are higher time frames, and we can't dispute or can't dispute the signs they show us. Okay, so what am I doing right now? This is where I will bring out experience. Okay, so what will happen here is, if we have a bullish engulfing candle, which I'm expecting, like I said earlier on, the US dollar is still a safe haven currency pair, and when there is crisis, investors tend to put their money in safe haven currency pair. I'm expecting a push to the upside. Okay, so if we see a bullish engulfing candle break out of this area, best believe our next target will be here. We are coming here. If we see a bullish engulfing candle break out of this here, we are coming here. And if this trend line I drew here, if you look at this trend line properly, let me zoom in properly. If you look at this trend line properly, this is looking like the third touch of the trend line. For those of you who are familiar, we are not familiar with trend line, the third touch of a trend line does the reversal to continue with a trend. It reverses a pullback to continue with a trend. See how we came in here, we are reversing, we touch the trend line, we pushed up, it's also reversed again to a third to the trend line. If you see a bullish engulfing candle close here, you can start buying and will come into this area. It's as simple as that. But if again we failed to break out from this area and we see a bearish engulfing candle break, you can start selling all the way to the downside. To be on the more safer side, wait for price to take out this area. Okay, wait for price to take out this area, then you can start selling all the way into this area. Once you come here, close out significant amount of your profit, or close out 70% or 60% of your profit. Push your stop loss past break even, anticipation will just keep going to the downside. So the deciding factor for the dollar index will be this area marked with this gray bar. If we have a bullish engulfing candle, we are coming up here. If we break out from here, especially if we take out this area marked with gray bar, we'll just experience a further decline to the downside. Alright, if I draw my Fibonacci, you will see that, pardon me, my Fibonacci, you will see the market is also giving us reason as to why it wants to say. This is looking like we've come into the 61.8 Fibonacci levels. We have normal resistance, we have Fibonacci resistance, we have a sharp pattern here known as double top, telling us, look, expect a decline to the downside. Like I said, what tends to happen out of the range, the market can give you reason as to why it wants to buy and also give you reason as to why it wants to sell. So the deciding factor is here. If we have a proper break of here, we are coming down. But if you have a proper blow above this area, and once this area becomes our next profit target. So that's it for the dollar index. The dollar index has pretty much told us what it wants to do, one of which has to happen. But I'm favoring this market to the upside to the tune of 60%. I'm favoring this market to the downside to the tune of 40%. I said earlier on, as traders, we react to what the market is telling us. If we want to blow to the upside, we align ourselves in looking for buy position. If we want to break to the downside, we also align ourselves in looking for selling opportunity. So let's look at GBUSD. GBUSD has also been in a similar situation. GBUSD chart is also similar. It's very more similar to that of the euros. We've been in this. We've been consolidating around this area for the better part of 2025. Down till now, we've been consolidating around this area, and we tried this area marks with gray bar. We tried breaking above it, we failed. We tried again, we failed. We came again, we tried again, we failed. We even form an inverse head and shoulder, left shoulder here, right head, right shoulder. We tried breaking above the neckline, we failed, and we are currently pointing to the downside. Okay, we are currently pointing to the downside. Okay, if I draw my trend line from two recent high, pardon me, okay, this is horrible. This guy is horrible. Okay, this guy, let me clean this. Okay, so cool. So what's next for this guy? We form a triple top. This is a triple top. I won't be surprised if we start coming down. Like I said earlier on, triple top are bearish reversal sharp, and they have the potentiality of reversing, and this is an immediate trend, to continue with a major trend which is bearish. So this is the major trend is bearish, although we've taken out of this trend line. This is the breakout of a trend line, a retest of it. A continuation to the upside should have occurred, but this we have an issue breaching out from this area properly. Now I want to state this clearly. I've said this before on the channel. For those of you who are new, who are joining us, a break of a trend line is not a change in market structure. Trend lines are technical tools, not market structure. A change of market structure occur at the break of a high or a low. For those of you who are not familiar with baby pips, we are being told in baby pips that a change in market structure happen at the break of a high or a low. So in a downtrend, price should be creating lower lows and lower highs while maintaining the high. So until this high here is broken, whatever is happening here is an immediate trend within a major trend which is bearish. This is an immediate bullish trend within a major trend that is bearish. So pardon me, let me take out this trend line. We don't need anymore, it has been breached. We don't need anymore. So if we start pointing to the downside and we take out this area marked with gray bar, best believe we are coming to the downside. It's as simple as that. If we take out, so in the coming weeks, if you see price come and break out from this area marked with gray bar, best believe we'll bleed all the way to the downside. Once we come in here, I'll be locking in significant amount of my profit, push my stop loss past break even, in anticipation that will just keep rallying all the way to the downside. This area for me will be an area of concern. This area will be an area of concern. Why so? Price has interacted with this area in the past before. You don't want to play with this area, right? We can come in here, form a base and start pushing back to the upside. It is possible. So the deciding factor for me will be if we take out this area. Like I said earlier on, due to the current happenings in the world, I expect the dollar to just strengthen over the pound and we just rally all the way to the downside. Okay, so you see how I'm now using technical fundamental analysis in confluence with technical analysis. We've seen a reversal sharp pattern known as a triple top, and also we expect the dollar, being that is a safe haven currency, to start being strengthened, because investors will start rushing into the dollar as if even currency due to the current happening in the Western world, in the Middle East and in the Western European countries. So if we take out here, we are coming here. So let's see if on the daily time frame I saw this, but I don't know why I didn't really take it. Right? If I draw my trend line as I drawn here, this was a fake out. This was a fake out. We came in here, we bounced, we broke out, we take out. So how we take out this trend line? We came in for a retest, and we've broken out. This is not looking like a proper break, but all fine. And just best believe if we come here, we are coming down. Okay, if we come here, we are coming. I won't be surprised if. So this is looking like it's a breakout of the trend line. We did a retest of here, we zapped here, and we're trying to, maybe we'll come here to do a retest. If we come in, so I won't be surprised if we pull back into this area like this for a retest. If we pull back into this area for a retest, so how I draw this my counter trend line, I will draw another one again somewhere around here. And if I see a bearish engulfing candle bounce here, and we take out my counter trend, like I see a proper break like this of my somewhere around this area, like a replica of what happened here again, I'll start selling. And once we come in here, first of all, once we come in here, I will lock in significant amount of my profit. Those of you who understand what I'm saying is, I won't be surprised if we pull back into this area to do a retest of here. If we come into that area for a retest and I see a bearish engulfing candle bounce, we are coming in here. But once we come in here first, I will lock in significant amount of my profit here first. I don't care how little, I will lock in significant amount of my profit, push my stop loss past break even, anticipation will come here. Once we come in here, I'm closing my entire trade. But if we break out from here, as I stated earlier on, let me clean this. Let me clean this. Let me clean this. I pride myself a cleaner shot. I said that earlier on, if we take out this area right here, our next target will be this area. Potentially will come into here. If not here, the market moves from one level to level. What that will mean is that this immediate trend has respected this zone, or we just have a decline to the downside. This is like 1,000 pips to the downside. You don't want to miss out on this. This is that triple top telling us, look, expect a reversal, expect this immediate trend to reverse, to continue with the major trend which is bearish. Okay, so that's it for GBP USD. Let's look at AUDUSD. AUDUSD has given up, guys. It has given up, right? We've made money from AUDUSD sometime around last year November. Last year November or December, January, I've forgotten, but we made significant amount of money from AUDUSD. We saw the breakout. It was a simple breakout of this bearish trend line, a retest of here. We bought somewhere around here and we made all this pips all the way to the upside, we made significant amount of money here. But looking at this, this is not looking healthy. This is not looking healthy. Once we came in here, I closed out my profit entirely. While this is a resistance area, it has the potentiality of reversing the trend, but we've broken above it. But these candles are not looking healthy. I went to the 3 hours, sorry, daily time frame. If you watched last episode, we called this this was looking like a double bottom. The 4 hours paint a better picture. So this was the double bottom telling us a reversal to the upside should occur, and this was the neckline. We came above, we broke above the neckline. This is why I say don't buy at the breakout of the neckline. Wait for price to break out, pull back into the neckline for a retest. All right. Once we broke out of the neckline, I didn't buy. Once we came in here and we started consolidating, I wasn't really confident, so I just put a bar here. I looked at this, and this was a range. This range was as a result of this move like this. The market, like I said, when the market moves too linear, too straight, the market will tend to go into a range. So once I saw the range, I put up my black bar here, my resistance bar here. I told myself a breakout, a retest will buy. Okay, but we broke out. We came in here. We didn't really do much. We pushed out, we fade again, we tried again, we trade again. Guy, this pair has given up. I won't be surprised we will decline to the downside. Okay, the Aussie dollar hasn't have a lot of buying pressure to bring the dollar, the USD to its knees, right? So I won't be surprised if we have a decline to the downside, maybe to do a touch of fear. Like I said earlier on, the dollar is a safe haven currency, but I expect AUD/USD also to actually do well, because AUD/USD is being pegged. One of the major commodities in that country is gold, and gold is a safe haven currency. But I'm expecting them to actually rally, so I'll closely watching this and see what will happen. But I won't be surprised if we have a decline to the downside. So AUD/USD, I have no bias for AUD/USD. Maybe we'll probably come in here for a retest, but for now I have no bias. Now this is a pair that I'm closely watching, and I feel we might actually experience a further decline to the downside. I'll be ending this analysis with NZD/USD. Then I'll be ending it here. Okay, NZD/USD, I've been closely monitoring this pair, and we've run into this area, or this trend line here. This trend line has been the catalyst as to why this market has been blown all the way to the upside, and we've come in and we are currently reacting to this area. Not only have we come into this trend line, we also have come into this resistance area right here, and you can see these candles are doji candles, telling us there is a weak buying pressure that will occur. There's a weak buying pressure, which I expect a decline to the downside. And if I draw my Fibonacci from swing low to swing high, this aligns with the 61.8 Fibonacci. So we have normal resistance, we have trend line resistance, we have Fibonacci resistance, we have a sharp pattern that wants to occur. This is looking like a double top that wants to occur, giving us an optimal reason as to why we should expect a further decline to the downside. Okay, the weekly paints a better picture. The weekly, you can actually see this doji candles are weak. Sorry, doji candles are weak candle. We tried, we failed, we tried again, we failed, and it looks like we are now ready to start pointing down. Although I spotted this head and this double top on the last episode of Forex Weekly Insight, and I said if we take out this neckline, this area marked with the gray bar is the neckline, and if I see a breakout of here, a breakout, a pullback, we don't sell out the breakout, we don't go and buy the breakout, don't go and sell out the breakout, wait for price to break out, pull back here into a retest, a bounce from here, we'll start selling all the way to the downside. But this, we should be wary of this guy, this area, this trend line here. Once we come in here, please lock in significant amount of your profits, because this trend line can come in here, bounce and start pushing to the upside. It is possible. This trend line is here. This is a washout area. Like, guys, don't play with this trend line. It can mess with your trade. Okay, most of you just do analysis, and your analysis is actually spot on. You just click the buy button or sell button, and your analysis is actually spot on. But because you can't identify areas of concern, you just place that trade. You will see your profits You'll be a lot of profit too, only for the market to come into an area of concern you that you didn't see and start reversing, and your winning trades now turn into a losing trades. Worst scenario, your stop loss gets smashed, and the average trader would tend to be very angry. Emotion steps in. You likely going to revenge trade, and you have, you incur more losses. One losing trade can open portals of series of losing trades. You don't want that to happen. So once you come in here, you want to lock in significant amount of your profit. This is looking like a first top, second top. This area is the neckline, although it looks like we have an issue breaching the neckline, but all finger crossed. I hope we just rally to the downside. Like I said earlier on, I'll be expecting most of the major currency pairs to decline, while the dollar is a safe haven currency. I'll be expecting most of the safe haven currency pair to decline to the downside. So if you see a breakout of here, a retest of here, we can start selling all the way to the downside. So I'm favoring this market to the downside to the tune of 70%. I'm also favoring this market to the upside to the tune of 30%. I'm going to tell you why I'm favoring this market to the upside. All right, it looks like we form what they call a triple bottom. If you look at it from the big picture perspective, this is looking like a low. It looking like a first touch, second touch, and third touch. So this is a triple bottom, giving us a reason as to why this market should buy. I've said it before, triple bottom are bullish, reversal, sharp, and not only are we from a triple bottom. If you look at what's happening right here, this is looking like a low, a high, a higher low. This low is higher than this, so it's telling me we're starting to form the characteristic of an uptrend. So the bad boy is this guy and this trend line that has refused from price from blowing up. So if you see a bullish engulfing candle break above this area marked with gray bar, we are coming here. Okay, I'm assuming if you see a bullish engulfing candle break above this area, we are coming here. It's as simple as that. If you see a bullish engulfing candle break above here, this area will be our next target. All right, thank you for staying to the end of this video. If you have any question, please drop it at the comment section. I go through the comment section. If you didn't get my name is Bestman Depre Kelsian Makri. I'll catch you guys in my subsequent video. Peace and love.